Welcome back to Tesla Daily News Podcast. Today is March 14th, 2026. Here's what we're covering in the next few minutes. Tesla's Robotaxi push just got a major signal with Cybercab production reportedly underway in Texas. Tesla's energy business got a new regulatory green light in the United Kingdom. And the competitive EV landscape is heating up fast with BYD rolling out ultra-fast charging in Europe. Let's get into the stock-moving stories. Story 1. Tesla's Cybercab is reportedly in production in Austin, and mass production could start as soon as April. That headline matters because Tesla's valuation debate increasingly hinges on whether it can pivot from being just an automaker into a high-margin autonomy and robotics platform. A dedicated robotaxi vehicle is the clearest test of that thesis. According to a report citing the Wall Street Journal, Tesla has begun production of Cybercab at its Austin, Texas factory. The vehicle is designed with no steering wheel and no pedals, and Tesla is aiming for volume production potentially beginning in April. The details here are what investors will latch onto. Elon Musk has suggested the Cybercab could cost under $30,000. Tesla expects to build a few hundred vehicles per week at first, with production ramping slowly. The long-term target Musk has floated is as high as 2 million vehicles per year. The impact: if Tesla can actually produce a low-cost, purpose-built robotaxi at scale, that supports a much bigger total addressable market than retail car sales. But there's a giant gating factor: regulation. Because Cybercab lacks traditional controls and even side mirrors, Tesla would need a special exemption from the National Highway Traffic Safety Administration. The key investor takeaway: production starting is a real milestone, but the near-term stock reaction will likely track regulatory progress and the pace of real-world deployment more than the vehicle's existence. Story 2. Tesla's unsupervised robotaxi footprint in Austin appears to have shrunk, not grown. This one is important because it goes straight to the credibility of the autonomy narrative, and credibility is a multiplier on valuation. A Jalopnik report citing a robotaxi tracking source says Tesla's unsupervised robotaxis in Texas appear to have been reduced from 8 vehicles to 4, while the overall robotaxi fleet in Austin is described as about 37 vehicles. Context: Tesla has been testing robotaxi operations in Austin since last year and only later began testing without in-car safety monitors. Impact: even if the numbers aren't officially confirmed by Tesla, a perceived pullback feeds the market's skepticism. Is Tesla being cautious because the system isn't ready for broader unsupervised operation, or is this just operational tuning? Takeaway: watch for hard evidence of expansion, like a steady increase in unsupervised miles, larger geofenced areas, and improved safety metrics. Without that, robotaxi optionality stays a story rather than a cash flow model. Story 3. Tesla's full self-driving reputation risk is back in the spotlight after another viral safety incident. A Greek auto outlet amplified a widely shared video alleging a Tesla, with full self-driving engaged, drove through a lowering railroad crossing barrier and stopped on the tracks before the driver intervened. Now, to be clear, we don't have Tesla's telemetry or an official regulator finding in this article set. But for investors, perception can matter almost as much as the facts in the short term. The business challenge here is simple. Tesla wants to sell autonomy as a product and as the basis of robotaxi revenue, but any high-profile incident increases regulatory friction and raises the odds of tighter rules, investigations, or delayed approvals. Impact: negative autonomy headlines can weigh on analyst sentiment, especially around software attach rates and any timeline for paid robotaxi rollout. Takeaway: the bull case needs both technical capability and public trust. If those move in opposite directions, the stock multiple can compress. Story 4. Tesla gets a big energy market win in the United Kingdom with a license to sell electricity directly. This is one of the most underappreciated parts of Tesla's story. Energy isn't as big as automotive yet, but it's strategically valuable because it can be recurring, software-enabled, and less cyclical than car demand. Multiple outlets reported that UK regulator Ofgem granted Tesla Energy Ventures Limited a license to supply electricity to residential and business customers in Great Britain. Details: Tesla already has UK authorization to generate electricity, which supports megapack deployments feeding the grid, and the company is already in homes via Powerwall and solar. What changes now is Tesla can become a direct retail electricity supplier, at least on the power side. Impact: if Tesla pairs retail power with Powerwall, solar, and smart charging, it can create a bundled energy and transport ecosystem that can support higher lifetime value per customer and potentially smoother margins versus vehicle-only revenue. Takeaway for shareholders: watch for Tesla's go-to-market plan, pricing strategy, and whether it targets Powerwall owners first. Also watch how quickly Tesla can scale customer acquisition in a highly competitive UK retail energy market. Story 5. BYD is pushing ultra-fast charging into Europe, and that's a direct competitive threat to Tesla's EV edge. Investors often treat charging speed and charging availability as soft features, but they can be hard differentiators at the point of purchase, especially as EV adoption spreads beyond early adopters. Reports out of Europe say BYD's premium brand Denza will bring the Z9 GT to the UK and Europe with charging rates up to 1,500 kilowatts. BYD claims it can charge from 10 to 70% in about 5 minutes and from 10 to roughly full in under 10 minutes in some descriptions. BYD says it will install hundreds of its flash chargers in Europe this year, and it already has more than 4,000 such sites in China. Impact on Tesla. Tesla's supercharger network remains a major moat, but competitors improving both vehicle charging capability and their own station rollouts can narrow that advantage. If consumers start believing charging is as fast as fueling, EV adoption could rise, but Tesla may not be the only winner. Takeaway. Tesla investors should track whether Tesla responds with faster charging roadmaps, improved charging curves, and continued supercharger expansion, especially in Europe. Story 6. EV demand signals are mixed, and January U.S. registrations show a broad drop, with Tesla still dominant. A Jalopnik piece citing S&P Global Mobility data says January EV registrations fell 41%. Within that, Tesla registrations fell 26% to 32,123 vehicles. Model-level details matter. Model Y registrations were down 4.5% to 22,831. Model 3 registrations fell 62% to 5,269. Cybertruck slipped 48% to 1,458. Context: registration data is a proxy for sales, and policy changes can distort timing. Still, the direction is meaningful. Impact: the key investor question is whether Tesla can stabilize volumes without leaning too hard on price cuts that compress margins. Also, a weak Model 3 number raises questions about product cycle timing and competitive pressure in the entry to mid-segment. Takeaway: watch for incentive activity, inventory levels, and any updates on refreshed models, cost reductions, and regional mix. Quick market backdrop: oil and macro volatility remain in play. A broad markets roundup noted oil moving near triple-digit levels, driven by geopolitical risk around the Strait of Hormuz. For Tesla, higher gasoline prices can be a tailwind for EV interest, but higher rates and inflation expectations can pressure valuation multiples. So it's a tug-of-war: EV demand tailwind versus macro headwind. Let's wrap. Today's big themes were Cybercab production signaling Tesla's autonomy ambition, real questions around Robotaxi scale and FSD safety perception, and a meaningful expansion of Tesla Energy into UK retail electricity. On the competitive side, BYD's ultra-fast charging push in Europe is a reminder that the EV market is not standing still. For tomorrow, keep an eye on any regulatory updates related to steering wheel-free vehicles, any hard metrics from Tesla's Robotaxi program, and whether Tesla shares more specifics on how it plans to win customers in the UK electricity market. If you found this helpful, subscribe to Tesla Daily News podcast for your daily, investor-focused Tesla roundup, and follow for more updates as the story develops.